Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, March 23rd. Hope you guys are having a great day so far. We got just two economic news releases to go over today. We got the weekly jobless claims, obviously because it comes out every week. Last week, we had 243,000 people apply for unemployment. Forecast for this week was at 240,000. And this week it popped up to 258,000, so a little bit of a surprise there. My assumption would be is that we're getting more people coming into the labor market as we're starting to see that trend that people are coming off the sidelines and getting into the market that were out for quite a while here, as we saw last month and the last 2 months of the U6 number dropping down, and the labor force participation rate has been increasing. So that might be indication. I guess we'll have to wait and see once we get March numbers what that looks like. But we haven't been up to 258,000 people applying for unemployment in a while. We've been kind of in the 230 range, and then a few times popping up to 240 range. So this is a little unusual of the current trend. So we'll have to kind of see if this is what we're going to see going forward here or not. Last but not least, we got the new home sales for the month of February. So back in January, we had 558,000 new home sales. Forecast for February was 571, and it jumped even past that to 592. So bit of a mixed report today. We had new home sales, great number here, jumping up quite a bit, up to 592,000, and weekly jobless claims. Unfortunately, more people applying for unemployment, which is not a great sign. But if it means more people coming into the labor force and having confidence of more jobs being created, that could be a good sign. But for future reference. So let's kind of look forward here. Right now, the stock market is up a bit after taking a beating the last couple of days here. Most of this week has been kind of really due to issues with the healthcare bill House vote. They're planning for a vote tonight. There's just been some uncertainty with all these promises made by the president, and they're not seeing any details of it. And this healthcare bill is just kind of a prelude or to the rest of it. Is he really going to be able to get a lot of this stuff accomplished? And he's getting a lot of resistance in this health care bill, even from other Republicans. And this may or may not pass. Right now, it looks like they had the votes to not pass it. So this could, the investors are getting a little nervous. They kind of built this all up. The stock market took off quite a bit based on his campaign pledges. And they don't look like they're going to come to fruition. They're going to probably go the opposite direction here. And right now, this is one of them. If the healthcare bill passes, you'll probably see the stock market take off again a bit more, and that would be, of course, expense of the bonds. If it doesn't pass, the stock market will continue to lose confidence in President Trump's agenda here, and we'll probably see stock market correct a bit more, but that will help out the bond market, which in turn will help out interest rates a bit further as well. So speaking of such, this is a concern for me. As we see, we closed above the 50-day moving average and the second resistance line. And yesterday, we had this line which kind of pulled back, and then today we started lower than the resistance. We're up for the day. But this could be a potential resistance. And as you can see, we were higher and we pulled back a little bit. We're about 4 basis points lower than where we left off the day yesterday. So here on the West Coast, our pricing is going to be about the same where we left off yesterday. But just be a little cautious. Again, with this possible, we've been getting this pretty much just turn upwards. And with this down here, we need a couple of days of this. But if this continues, obviously we're going to see a downtrend and rates will get worse. But right now, rates are about the same where we left off. But I just urge a little cautious here, because right now the market's basically telling us that they're uncertain where things are going with the health care reform that's taking place right now. They're a little uncertain, so if things can get accomplished or not. So if that doesn't pass, like we said, that will probably help out the bond market at the expense of the stock market. If it does pass, then stock market will probably take off, and that will be at the expense of the bond market, and we'll probably see worse or higher interest rates in the near term here. All right, so again, just be cautious here. Tonight we'll probably know a little bit more by tomorrow as to which direction we're going to go. But again, just be a little cautious here. All right. So, anyways, if you guys want to get more updates throughout the day, just come over to Twitter. I do post on my Twitter handle at Mike Bjork, and you can get more updates throughout the day if you like. Hope you guys have a wonderful day yourselves, and we'll see you guys tomorrow. Thanks for watching. Bye-bye.